This weekend, Joe is a chef. I don't know if you knew this, but he's like major chef. Wow. So he's doing prime rib.
No, I went to there was a restaurant.
That was a restaurant?
Yeah.
You didn't cook that?
No.
It looked gorgeous.
I did yeah, that's why I thought that should have been the tip-off. It was a restaurant. I did make prime rib once, and it's not as hard as I would have thought, but I'm still lazy.
To give you a vignette on this, and this goes to the 3rd Congressional District, where the election was now. Joe's putting out some dinner that costs $90 or whatever. I can't keep up with Wiesenthal. I'm in a Filipino restaurant in Queens, upstairs.
Who isn't?
And the only way to keep Mrs. Keene happy is to serve fish with a damn head on it. So he had prime rib. I had prime fish, and it was like we had way more bliss going on.
Did you do Filipino karaoke, Tom?
No, we didn't, but it was there.
Yeah. One thing I've learned from my time in Hong Kong, where there is a very large Filipino community, never do karaoke in a Filipino bar because everyone is better than you.
They're 4 years old and they're singing.
It's amazing.
Tracy, I want to go to the banks, you and Odd Lots, in your conversations. What is your angle on the banks? And I do this with what we're seeing in commercial real estate in New York.
Yeah. So I think this is actually really underreported at the moment. There is this sort of quiet revolution going on in banking regulation, and specifically how we bail out the banks. And you can kind of speculate if there's a reason why regulators might be doing that at a time when there is a lot of concern about CRE, as you pointed out, or whether after the experience of Silicon Valley Bank, they just think it's time for a change and there were lessons learned there. But there are all these little things sort of under the surface. For instance, they want to reform the way banks tap the discount window. So one of the things we learned from last year was that when the time came to access emergency liquidity from the Fed, the banks just were not operationally ready to do that. And so now we see regulators like the OCC saying, well, the next time this happens, we want banks to absolutely know how to do this. So we're going to make them access the discount window like once a year or something like that. And they're going to have to pre-position collateral at the window as well. So they're going to have to tie up some of their balance sheet just in case for emergencies. And I think this is kind of a big change for the banking system that people aren't really talking enough about.
And Joe, I mean, I don't know. I'm an old banker myself. If I'm kind of with, the guy over there, J.P. Morgan Chase, Jamie Dimon, don't we have enough regulations on the banks? Didn't we do this in 2008, 2009?
Well, wasn't the SVB, I mean, it sort of feels like some of these banks are pretty important, and yet they sort of avoided some of the regulatory burdens. And I think SVB was in this category that was just under the line.
I thought the SVB in particular was, hey, the regulations are there. They just didn't enforce them, or they didn't.
Yeah.
It kind of goes to the banks. We've got enough on our books. We hired 5,000 compliance officers. How about you guys at the regulators do your job?
Yeah, but I don't think if it wasn't properly supervised, I don't think that's an argument for less supervision, right? Like that is a failure of the regulators.
Not anymore, I guess, is the point that I hear from the bankers.
Right, but
we've done this already in 2008. We did our mea culpas in 2008 to 2009. We're done. Look somewhere else in the system.
We're definitely not done because we have Basel Endgame rules coming through. We have this change to the discount window. We have all these tweaks being made after the experience of last year, and you can see why regulators want to avoid another SVB.
Yep.
The funny thing...
What about private equity, private capital? I mean, to me, we were talking to Chris Wayland earlier. To me, do you guys agree that that's where the shadows are this time around?
Absolutely. I think that's a super interesting question, especially in the context of inflation coming in higher than expected yesterday, and the fact that the economy still seems to be going pretty strongly despite all the rate hikes. I think it's more of a problem potentially for the Federal Reserve in terms of its inflation fight. Why is the U.S. economy seemingly more interest rate insensitive than it used to be? It could be because we have this massive pool of private credit and shadow banks that we just didn't have before. In terms of actual regulation, I think it's important to remember that a lot of the post-2008 financial rules were meant to shove risk out of the regulated banks and into the shadows.
The thing that keeps striking me in some of these conversations is that we talk about these banks that have failed, and some of the big ones are like very like specialized banks. So SVB, Tech, some of the the crypto ones, and now NYCB, New York City rent stabilized real estate. But if you think about it, like maybe it's a good case for more risk to be taken on by private credit lenders who can build up a specific relationship, who can really get to know an industry. But if they fail, it's okay they fail because that's that's risk capital as opposed to people's deposits at risk. And so maybe it's a better system.
Tom, I don't know if you saw, by the way, but we put an online version of the quiz.
Oh, yeah.
Including,
just went up.
Including 3 of your questions. So it's online. Listeners can take the Fraught Lots quiz and test their knowledge.
Are you showing me with a beverage of my choice in my hands?
Tom is a natural quizmaster. You get please pre-commit now to coming back next year.
I'd love to come back next
Okay,
year
good.
because what I didn't know, Paul, is how smart the audience was. Luke Kawa was there from UBS.
Yeah.
He was the dumbest guy in the room. I mean,
Saying something.
it's amazing how that is.
There we go. We got some video up there on YouTube. Okay.
Oh
Some
my
still-
God! We get still photos there.
Oh, there it is, yeah.
Yep.
Yeah, that was actually a good question. Here they are. They're singing now. They're singing.
That looks like we're doing
Feelings.
karaoke.
Yeah, duet there. And
Well, I
yeah.
was at an event last night, and there were some smart people there. And this young lady came up to me. She's a senior at some college up there in Cambridge, Massachusetts. Odd Lots podcast. It's my favorite
Really?
podcast.
Oh, yeah,
I'm like,
they don't listen to us.
I'm like, well,
You know,
that's
we don't
interesting.
exist.
And then the question comes: are Joe and Tracy as nice as they sound
No.
on air? And I just said, absolutely, these guys are the best. So you've got fans out there,
that's
all
really
demos, all different demos.
Very
out there.
flattering. Always love hearing that.
And Valentine's Day, I want to set up the song here as we go out in this hour because I think it's really, really important. Is one of the great. I used to go to Tokyo a lot, and you go to the Akura Hotel Akura or whatever.
I remember the Akura.
And it was like magical. It was like the lobby of the Imperial Hotel was like 1960s, completely unchanged. And you go to the Akura, and they had this bar. And if you were an American girl, British girl, whatever, and you were in high school in Tokyo, you would sneak into the Hotel Akura bar, low ceiling.
Tracy probably did this.
This accurately reflects my experience as an American high school girl in Tokyo.
You would go into the Hotel Akura bar, and you'd sit there, and you'd be hanging out with your friends, just all, business guys, dark and, cloudy. And there was only one song that could be played there because they only play Western music in Tokyo bars. And, you start with B. Joel.
Yep.
You got to have Billy Joel. I mean, you're in.
Oh, wait, this is a little bit before my time. Okay.
It's before your time, but they were still playing it in Tokyo, to say the least. Happy Valentine's Day, everybody.